Hey, my friend, thank you for watching this video on trading gaps for daily profit. This is Barry Burns with Top Dog Trading, and let's jump right into it. So trading gaps is one of those classic techniques that everybody learns normally right at the beginning of their trading career. And it's a very, very popular way of trading. It's very appealing in the sense that it looks easy at first glance. And it also is one of those things that doesn't work as well as it used to. And it doesn't work the same way as it used to work. But that's not surprising because it is so popular. Anytime anything becomes popular, guess what? That's right about the time it stops working. Everybody knows about it. Everybody starts trading it. And guess what? Most people lose money. So once everyone starts doing something, it stops working. You've got to have an edge. By that, I mean you can't be doing the same thing everyone else does. So here's the classic pattern that people are always looking for. So we've got one day here. By the way, these are California times down here. And this is a daily, it's a 3-minute stock chart. And so you've got your open way down here. And the previous day closed way up there. And the easy way for trading gap trades, gap trading strategies, gap trading intraday, gap trading rules, whatever, is to just say, okay, I'm going to trade it back into the close of the previous day. In Japanese candlestick patterns, by the way, they also traded gaps, and they call it closing the window. So it's really nothing new to the Western world. The Japanese were way ahead of us on that. So they said, okay, window's open and now it's going to close. Alrighty, that's great. And yep, that's fun when it happens, but it's not the way it normally happens anymore. Sorry. They never make it easy for us to do it, do they? Okay, but obviously it still does happen sometimes, and there is an example. Now let me show you what happens most of the time these days. Here's another example. And if you were to say, alrighty, we closed here this day and we opened down here this day, and I'm just going to trade the gap close right away, you'd be a sad little puppy because it didn't close right away. In fact, let's watch this whole day, see how it closes, when it closes. All right, so you think, well, okay, I'll just trade it later in the day, and the day ends, there's the end of the day, and it still didn't reach the gap close. There's the line right there. So one of the questions when it comes to technically how to trade this is, all right, where do we put the line? So if we're looking for the gap to close, now technically you would say we should do it at the previous day's close, because that is literally closing the gap. It closed at one price one day, and then it opens at another price another day, and you're waiting for it to close or get back to the close of the previous day. That's not the best way to do it. The best way to do it, in my opinion, is to look for the little low there, and that's just a more conservative way to trade it. Because I've seen many times where if you put it at the close, or the last bar could be a green bar, and maybe the close would be up there then. And the markets are not that perfectly neat and tidy, and so they're kind of messy. They're messy because you've got millions of people all over the globe trading and seeing different things, different time frames, and so forth. So don't expect to get to the exact penny, pip, tick, or pixel on your chart that you want it to get to. Allow for that messiness. So be conservative and place it at the lowest low there and wait for it to come back into that level. Okay, so now that we have established that technique, here's the other thing that I want to share with you. After the market gaps, quite often what happens is it goes kind of sideways for most of the day. In fact, so what happens, there you go. Big move down with our nice gap. Boom. Okay. And it goes all the way down, actually, it goes all the way down to there in the first 3 minutes. So from there to there in the first 3 minutes. What happens the rest of the day? Not a whole heck of a lot of anything, right? It just kind of goes sideways. That is what normally happens. Now that is the norm. That is what you will see more days than not. And remember, trading is about trading probabilities, and we never know what's going to happen. There are no certainties. So we're trading probabilities, and this is the probability scenario. And part of the reason, logically, is because after the market has a big move down, and remember, this is not showing any pre or post market data, because if you show pre and post market data, you won't see the gap. So there's been trading that's gone on overnight there or early in the morning before New York opens. And now, so what's happened is a bunch of people shorted. And when the market opens, open outcry, and most people are looking at their charts, they're saying, dang, I don't know. I've already missed out on that big of a move. So what do I want to do? Do I want to go short now? I mean, the dominant direction is down, but I already missed out on all that. So psychologically, the masses are saying, I'm getting in too late. On the other hand, the sentiment is bearish, so some people are thinking gap and go. Some are going to buy thinking that the gap's going to close, and you've got this conflict. So you've got people on both sides, and the bottom result is that after gaps, quite typically on a daily or a intraday chart, the market really just doesn't go anywhere. It just kind of goes flat for the rest of the day. It's usually not a great trading market for the rest of the day. So here we go, and it's several days down the pike here, about 3 days later, and we get another gap. So from there to there. Do we get a gap close? If you're going to trade the gap close, maybe you even wait for the peak there to come back down. Nope, sorry, you are not going to get it. The whole day goes by and the gap does not ever close. So what does happen? Well, just what I said, gap's up, and now you've got conflicting views, and so therefore the market goes sideways for most of the day. It finally does go up, but again, it goes up in the afternoon, after lunch actually. So if you are going to look for a market move after a gap, usually it's going to be after lunch. And that's exactly what this is. This is 1 o'clock New York time, 10 o'clock California time. And where does it go? It goes back to this blue line. Hey, wait a minute. What's that blue line? Well, that blue line, if we scroll back, that's where this gap started. So the gap does close eventually. This gap that we just showed, but it closes not the same day. There's day one. I'm going to scroll through faster. Day two, nope. Day three, yes. So it took 3 days for that gap to close. Therefore, what I recommend is that you do put these levels on your chart and make them something unique, like a different color, whatever color you want that means something to you, but just that you don't use for anything else. So you might use something that stands out. You're not going to use it for other support resistance levels. So let's say you want to use goldenrod. Okay, and we're going to make it a little thicker so it really stands out. And now whenever I see that line with that thickness, I know, oh wait, that's where a gap close would occur. And it is acting like almost like a magnet, really, that yes, the markets are very aware of gaps. The masses are aware of gaps. No question about it. And for that reason, they do tend to have a self-fulfilling prophecy. So I put it on there, but I don't expect it's necessarily going to fill in the first day, or even 2. Might take 3. Might take more. Oh, in fact, what the heck? Let's look further. Let's take that puppy off of there. And let's look at some further examples here. So here we get another gap. From there to there, that's the open. And that doesn't close. There's your gap from the previous day. Okay, so that one doesn't close. And we do not close that day. Let me just put the line on there again, make this clear for you. So there, I would put it there. See, now this day we closed here, but I wouldn't put my line there. I'm going to put it down here just to be conservative. All right, so then now look what happens. This is cool. Let me get this all in one chart. You can see this. So we gap down this day. We don't fill that gap that day. Again, notice how the market kind of just goes sideways for most of the day. Then the next day the gap fills, but you don't really have a chance to take the trade for the gap fill because it gapped up into the gap fill. So it gaps down and then it gaps back up into the gap fill. It's like, well, great. No opportunity to take that trade unless you were trading overnight. Again, we get the same dynamic here that I was talking about. Pretty good gap up. Okay, goes up. And then what's it do for the rest of the day? Just kind of goes sideways. Sorry. Not really anything exciting to do. If you did want to do something, it'd be in the afternoon. Take that little move there. So now this level, it's not only a gap close, but it is a support level. So the market bounces off of it, comes back again as support, and bounces back off of it. All right, goes back on up, and let's see. There we go. Got another one. In fact, we got two more, so let's look at these real quick. Got a gap up. Market, again, doesn't really go up much from there. Goes kind of sideways. Does not fill the gap. Next day, gaps up. It's a gap and go. Goes up. But again, most of the day, after it reaches its high, it's just going sideways. The afternoon, you get your movement where it breaks out. All right, well, if you like this video, please understand that, yep, it's free, but if you got value from it, please, you have a moral obligation to pay it forward by sharing it with other people. Click that beautiful little share button below. It's a real pretty nice little button there, and you will feel good. You will sleep well tonight if you click that button knowing you did the right thing. And that's really the best thing you can do to help encourage me to create more free tutorials for you. Click the thumbs up icon, leave a comment below. I love your comments, by the way. They really encourage me as well. And I'm giving away one of my favorite trade strategies called the rubber band trade, which has a very, very high win-loss ratio. Simple trade. I'll teach it to you in about 26 short minutes. Get my rubber band trade strategy absolutely free by clicking on the image in the top right corner of this video or in the description below the video. And if you're not watching on YouTube, then there's probably a link below or an opt-in form on the side. Once you do one of those choices, I'll personally email the video to you with the rubber band trade strategy.